Hey traders, order flow is something that a lot of people get gravitated towards. This is an aspect of trading that allows traders to see what large money or institutional or big players are doing in the market and how they actually move the market. People want to get ahead of the retail crowd. They see order flow as that solution. Now, the thing with order flow is that it is an amazing tool, but it's not necessarily going to be the holy grail. This is a very basic tool that I think that a lot of futures traders have to have a good understanding of to have a fighting chance in the market. So what I'm going to be breaking down for you guys today is actually how to learn the real aspects of order flow without the BS in 5 simple steps. So if you're looking to actually learn how the depth of market, how the footprint, how order flow works in relation to market movers, right? Larger positioning versus the retail crowd, this is the video for you. Now, like I said, it's not a holy grail. It's not necessarily something that you learn and boom, you see everything all the time. This is a very basic skill set for futures traders, and it's the recognition of patterns and movement of large orders against one another that gives you that edge in the market rather than just being able to simply read it, right? It's more of pattern recognition, speed, and timing. And I'm going to show you exactly how to get through that, into that with 5 simple steps to learning order flow. So if you guys are super excited about this video and to learn order flow, if you're new to this channel, hit that subscribe button, drop a like, and let me know in the comments down below. Have you been learning order flow using the depth of market or the footprint or either or? So let's dive into this right after this intro, and I'll see you guys in a bit. Now, like I said before, it's more so pattern recognition rather than this basic skill set, right? This is why I'm going through this video, right? A lot of people don't necessarily want to show people how the DOM works, how order flow works, because it's a very confusing tool that can't be explained super systematically. So the difference between actually using this successfully, consistently, isn't in being able to read it, it's being able to act swiftly in pattern recognition. So let's dive through these 5 simple, right, yet time-consuming steps to learn order flow and the premise of how to use order flow in the futures market, right? And some of these we'll be looking at the computer screens because it's impossible to show you just by looking at my face. So let's learn order flow in 5 steps. Number 1, very, very simple, but it's very necessary. We have to understand what order flow is and the tools that are used in the futures market, right? This is because I view order flow as a basic skill set that one must have rather than an edge in the market, right? Using it in specific ways generates an edge, but understanding it is a very basic skill set. So generally speaking, when we look at order flow in the futures markets, there's one main order flow tool, order flow concept, and a subcategory of it that a lot of people generally use. That one main aspect of order flow trading is going to be the depth of market, the DOM. You've seen multiple videos on this channel all throughout TRADEPRO Academy about the depth of market, right? And then the secondary tool is the footprint, which we've kind of reintroduced fairly recently. Now, order flow in itself, we have to understand the concept of order flow. Order flow is market orders that enter the market that actually move prices. It's the flow of market orders that trade against each other that create market movement. Because I say that they're market orders that they trade against each other because we look for reactions, we look for the speed at which these orders come in, rather than resting passive orders that a lot of people confuse order flow with. So if we look at a footprint or a depth of market, the main thing that's actually going to move the price is going to be a market order, right? If someone wants to buy 1,000 lots, maybe 6 points lower, versus someone that's actually buying 200 at market, who do you think is actually going to have more of an influence on the market price movement? It's going to be the person who's buying them at market rather than someone who's resting, waiting for an order to get filled. And that's the differentiation between order flow, passive and active orders. Order flow is watching how the active orders actually enter the market, the reaction that they cause, and right, the reaction between the buyers and sellers in these market orders. So if we look at the depth of market to begin with, right, I use something that's called the last traded quantity on Sierra charts, which allows me to see what the market orders actually look like, how they trade, the speed at which they trade with, so on and so forth, something that we'll talk about in a bit. When I look at the footprint already gives me the market orders, right? The footprint is comprised of market orders. Each individual candle allows me to see what the bid and ask within the candle are, but more so allow me to see what the difference between the bid and ask or the imbalances actually look like. So step number one is understanding, right, concretely what it is that you should be looking at, what order flow is, and right, the main tools associated with order flow and actually how to begin to comprehend what it is that you're looking for, because this really differentiates kind of the BS from the reality of order flow learning. So step number two is actually the real use of these order flow tools, right? How can we actually learn to read them? What is it that we're looking at? What is it that people don't necessarily want everyone to know, what they don't want to tell you about these order flow tools? Number one, if we look at the depth of market, there's going to be only two key areas you want to look at, right? In my opinion, the way that I've been reading order flow, the way that I've been taught order flow, there's two main areas that people are actually moving prices. Number one, it's going to be the market orders that are displayed in the middle columns the way I have it, right, as you can see on this DOM. Number two is actually the delta at the levels, which allows us to see the imbalances between buyers and sellers. This allows us to identify levels at which big orders have been imbalanced and markets have traded that created some kind of large move, right? So when I talk about the two middle columns to begin with, these are market orders, and it's very important to understand how they react. This is going to be the more complicated aspect because it's not as 1, 2, 3 and easily broken down in theory. The reaction of market orders is differentiated by the speed and the reactivity between one another, right? As we have explained multiple times. This is going to be the most pivotal part as how market orders actually trade. So if I look at a market order, right, for example, I have to understand that there's going to be a buy and a sell side, right? I also have to understand that size, yes, is important. However, it's not as clear cut as to me looking at maybe 600 sellers versus 500 buyers and saying there's more sellers. That means price has to go down, right? It's the reaction that these guys bring because you don't know if they're all coming in at once necessarily, right? You don't know what the reactivity, if they're starting to pile in more is. And one of the key factors of reading the DOM is starting off with these market orders and pushing the limit orders to the side. The limit orders are the passive orders where a lot of people make the mistake to focus on and hyper focus on large orders that may appear 10 to 15 points away realistically. When we look at the footprint, right, the real way that I've found most beneficial is understanding how delta in individual candles actually shapes up and the reactivity of the shape up of delta. So each candle, right, if I use a 12-tick chart, you can use any kind of chart, realistically has delta around the candle the way that I've broken it down. Now, when there is, for example, traders that have very positive delta and prices continuing higher, that's generally a sign of strength. There are points in time where delta is very positive and actually accumulates at a high with large sellers coming to react against it. That could mean that traders are actually getting stuck. So as we dive a little deeper into this, as we go to the computer over the next few steps, we'll take a look at how this actually plays out and the display of all of this. Now, step number 3, what we're going to be doing is actually learning very key patterns in both the depth of market and the footprint, right? Step number 4 is actually understanding these key patterns. These key patterns are considered the basics of understanding these order flow tools rather than building out that holy grail. So let's talk about the DOM since it's the figurehead of the order flow and where all the order flow information is actually displayed for us. right? The depth of market is the main tool that allows us to see all the orders that flow in, and then you can derive different order flow tools like the footprint from it. So when I look at the depth of market, right, there's two things that you have to know when reading the depth of market. If there are no buyers, right, I don't want to be a buyer and I can't necessarily expect price to go up very high. If there are no sellers, real strong sellers, then I don't expect price to really go that low and I can't really be a seller. What does this mean, right? So there's a lot of situations where people get confused as to what real buying and real selling looks like. Now, real buying and real selling, the way I like to define it, break it down, is based on reactivity. So what does reactivity mean? Reactivity suggests that there are large orders that come in at a support or at a resistance, right? Let's talk about buyers first. So reactivity suggests that there's a lot of buyers that step into a support zone and actually push price up continuously against sellers. That's what general reactivity looks like. So if we come into a support and the whole way down, naturally there's going to be selling, market selling, continuous larger size. And larger size on the S&P 500 futures we could suggest is around 300 plus. So there's a lot of sellers coming in. Now, a mistake that a lot of traders make is that they look at sellers coming into a low and they're not necessarily dropping, but very large sell orders are coming in. They think that this is a stuck short, right? They think that traders are getting stuck. But the main mistake here made is that if there's no buying reactivity, then prices aren't expected to reverse. There's no expectation for pops in price. So the buying reactivity suggests that you have a strong market bid that steps in with large quantity naturally that actually reacts price back up aggressive. So it's aggression and speed that we're after. So if you get like a 6-8 tick move to the upside on the S&P 500 futures with large orders 3, 4, 500 on the bid that come in at market, right? And you get that pop, that's the reaction. I'm looking for reactions like those if I want to be in the direction of that move, right? So those are the main two patterns that we want to prime ourselves with. Number one, they help us actually get in at support and resistances. And number two, they make sure that we don't get in where we're not supposed to get it. So we'll take a look at a few things on the computer as examples of this, but let's reiterate it there, right? We can look at the same thing with the footprint. However, we can look at it with stuck traders. So for example, if there's continuous delta that's rising, right, positive delta on the upside as prices go up, and we're coming into a resistance, I don't want to blindly start shorting the resistance. I want to make sure that these buyers are actually getting stuck. And how is that going to happen? With a reactive sell, right? So those are very, very important things that we have to learn and understand when reading order flow, right? Very basic patterns. So let's take a look at these order flow patterns from a depth of market and a footprint perspective here. I'll just pull up the footprint so we can have a side-by-side view of this on this little replay feature here. So when I'm looking at this, right, what's happening right now is we're coming into a key resistance. And there was most recently a very large seller. You can see a large negative delta that played into that 68.5. So we understand there's a big seller there. It caused a smaller 5-point move to the downside. And I want to see if we can actually reoffer or if we can short the area again for those sellers to come through, right? So we can get that push to the downside. So remember, our order flow pattern, our main order flow pattern is to see sellers at resistances and buyers at supports against the buyers that would run prices into that resistance or sellers that would run prices down into the support. So if I'm looking at the depth of market, right, the patterning that I'm looking for here is naturally we'll see some larger bids, and I'm looking at 200-300 plus on the market buy side in these two middle columns that come up. So that's fine, right? We can look at those, but I'm not going to be confident in the short until an offer comes in suggesting that there's multiple hundreds that sell. And not only do they just sell and nothing happens, I want to see a stronger downward shift after the sell to gain me some confidence that I'm going to actually be opening the shorts. Another thing to look at on the footprint here is you can see that there's a large negative delta that comes up here, and you're seeing buy deltas stack up. But against those buy deltas, there's some nice sellers, and the net delta on the day is still negative. Whenever buyers come in, the positive delta is pretty poor. So let's continue this and see how our patterning shapes up and what some of these patterns are that we can learn and put to the test here. So let's maybe speed this up a little. As I watch this right now, I'm seeing some sellers coming into 67. You can see 400s. They're reacting a bit to the downside, right? I understand that the real sellers came in about a point higher, point and a half higher. So you do have to keep that in mind before getting a little too handsy and aggressive on this. I can look at the delta on the individual candles, still fairly negative here. Like when you see large sellers like this, like 500s against like a 700 seller, 600s, I'd expect like a larger reaction from the larger quantity or the large quantity in itself. 810 on the sell right there, right? Kind of pushing prices lower, nothing crazy. And what I mean by that is you see 1, 2 ticks to the downside. When a large order that big comes in, right, and they accumulate there, I don't want to see a solid press lower, meaning a stronger reaction to the downside. Because if I start selling into these 800 sellers here, right? Is my stop going to be protected? I don't know. I'd have to have a stop maybe at 71, which has about a 4-point area in this case. You can see that large buyers are accumulating. They're getting a little trapped with the nice sell side coming in here. So what I could do is try to hold them out and say, okay, maybe I want to sell into here, into these areas, 67s, right? Because let me just pause this real quick here, because you can see around 67 where those larger orders came in on the sell side, we pushed down to 64, but the reaction back up very, very quick. So I wouldn't say these are necessarily strong sellers. This is all about the pattern recognition, right? I want to see, okay, large quantities, but I want to see them actually react a little more aggressively, not allowing the buyers who are in control currently to push prices up. You can see large orders on the buy side come in, they're trickling higher, right? We come into the 68 half where they sold prior, 500 going in on the market, sell at 68, 600 now, right? 800, not really doing too much damage to the downside. 900, right? 1,000 on the sell, 800 on the buy at that same area. It's a big fight amongst large orders here. 1,000 on the buy, 1,000 on the sell accumulating, right? We get a nice little downward shift. So when we get a nice little downward shift in that sense, right, I would want to do something like adhere to the sellers that are coming in, right? You see how they trickle down, not too aggressively, but not bad, right? Maybe I could start selling into these areas like this, like having a stop up here, maybe something like this, right? And having some take profits a little lower. But when I see a seller like that, right, this is the pattern recognition. Multiple thousand lots come in on the sell, right? At two levels combined, they push down a little. They keep selling large orders. Larger buyers that were coming in here are getting pushed away. And all of this at an area where larger sellers sold before. So buyers are getting trapped. But more importantly, big sellers are coming into an area where I want to be a seller, right? So we fill some here. Sellers are still trying, right? 560, 300 trying, 600s trying to push prices lower. I don't mind this as a reactive area for the sellers to come in. I could see some sellers coming into this area. You can see they're holding out, so I like how this is playing out right now. I'm comfortable with a short between 68 and 69. And you can see here on the footprint, right, buyers are accumulating. They're not necessarily going very far, right? Obviously, there's still time before this candle actually closes. But as I look at this, right, okay, there are some buyers on this footprint that I don't love, right? But I saw some large sellers coming in here. That was my reaction. That's what I liked about this trade. Right, you're getting 400 now, 500 trying to sell against a 500 buyer. Right. And every time a large seller comes in here, I get the reaction of a push lower, which I do like about this, right? You have 800 now selling here at 69 quarter, 900 against a 500 buyer. 1,000 goes sell. And they push price down. See, that's more of a reaction with speed right there. Even though it was a few ticks, they dumped it pretty aggressively. I would like to be a seller into these 69s, right? I'm pretty comfortable with this position. I want to sell into these areas because they keep selling large quantities between this one point of area. And look, every time they react aggressively against them, they react aggressively against them, right? So this is an area where I'm comfortable and confident that I have something of quality on the shorts at this point. Right? They keep throwing in large quantities on the sell. They get that aggressive move. We could have just waited for that, right? That move right there with all of these sellers that pushed it down several handles is the confidence inspiring move. And realistically, we can enter anywhere as long as our stops are above the most recent high, right? That's the reaction we want to see if we're going to sell into an area. Similarly, right, as we'll see very soon as we fast forward this, it's a reaction where we want to see with the buyers as well into a low. So let's just move along with this, right? You can see large sellers, they're holding out. We had multiple chances to get in at 69, right? They're doing pretty well. This takes a very long time actually to build up. Right, everything looks good. Let's clear this. Move these down, whatever, it doesn't matter too much. So as we're about to see this break to the downside, there's a point around our support zone where the buyers step in. So that's going to be very important for us to watch because we want to see how the reactive buyers, just like the reactive sellers, step in for us to be in a position for the long side, right? So that's finished. So as we enter a key area, what we can do is we can identify a region where there was large delta that actually got trapped on the short side. And you can see where the cluster started around this 57 quarter area. So naturally speaking, there must have been some kind of buyer that got these guys stuck because we traded about 12 points higher. So when I see an area like this, right, I want to confirm that the order flow is indeed buying, which would kind of come into our pattern recognition. Is there a large buyer that steps in for me to be a buyer that will create this turning point move? Now, we talked about delta as well. I want to be cognizant of where these large delta clusters are that have created a move originally. If I look at the footprint here, very, very strong sell pressure. Now watch this. Right? We come down and we get some large buyers stepping in. Let's pause this quickly here. So we come down very aggressively, right? Big sellers, big sellers. I don't want to get in the way of this. I don't want to get in the way of a big seller, but you start entering into a region where these large negative clusters are that created a stuck trader around that 57 before. You can see what happens here. 900, 800, 800, three levels, right? Nearly all 900. Sellers into a low. We're up a point and a half about. We have someone that slaps a market buy order 1100, 800, 600, right? 800 below that. And we pop up very aggressively about a point and a half. This is the reactive buyer that we see in this market, right? Look, every time we pull down, large buyers on the market order front come in on the bid, right? They come in very, very aggressively. So I want to be a buyer at this area. I want to be a buyer as these buyers are coming in. So this is where the reactive buy comes in, and the sellers get pushed aside very, very easily in this example. So we want to understand where the buyers step in to be a buyer with them and where the sellers step in to be a seller with them. The footprint tells us where that is on a visual aspect. The DOM tells us on a reactive aspect. And we can visualize where traders are trapped on the footprint, right, as we can from the delta on the depth of market. So the reactivity is a very, very important aspect to actually learning the order flow in itself, right? So practice these patterns as we'll get into the following steps of learning order flow. Step number 4 is reviewing and replaying these order flow patterns. Now, replaying is a very, very important aspect that I think a lot of people don't do as often and don't really get themselves into, but replaying, especially on Sierra Jigsaw, you have a replay feature that allows you to replay the DOM for the session. And this is great because it allows you to identify areas where large moves have happened, inflection points have happened, and through that, what you're going to learn is how the DOM reactivity actually breaks down and works time in and time out to create these moves. Now, what you're going to notice is the patterning is going to be very, very similar when these specific situations happen, suggesting that there is continuity and consistency with this patterning, right? If we take away the exact numbers, because those are going to be very different, but when you see certain things continuously repeat, you're going to see them, recognize them in a live environment, and be able to act on them. Now, there's naturally a very large difference between practice and in a live environment. That's why you want to do this as very strict as possible in a simulated environment before you put it to the test in something live. But in something live, you can put it to the test with micros where the risk is limited. So that's step number 5. Step number 5, what we're gonna do is put all of this to practice in first a simulated environment so we can have an understanding of what the results actually look like, and then we can move into a micro environment where there is some money on the table, right? There is some live aspect to it, and that gives you the understanding of what it is to see this in a live environment, right? Before actually putting sizable cash on the table for these types of trades, these actions. So it's very, very important. It's very pivotal. Step number 5 comes after you've done a lot of this pattern recognition, understanding the basics, and seeing this work, seeing this system work, and gaining constant consistency and confidence in the order flow that you've been reading. So step number 5 is very pivotal. Putting it to practice really, really breaks down what it is that you've been learning this whole time. And you'll see that these basic steps in order flow aren't the holy grail. It's the ability to recognize them and trade them, right? This is something that we do on a daily basis in our live trading room in front of y'all, right? We do it with our DOM straight up. We can see the orders, trade the orders, and talk everything about order flow. So I want you guys to check it out. Now, right, those 5 steps to learning order flow, they're fairly simple and they really weed out the BS from the reality of order flow trading. And a lot of people don't want to tell you this, but it's not a secret to understand these 5 steps. The secret is in the pattern recognition, putting it to practice, and actually developing your skill set, right? So this is the breakdown of how to learn order flow in a few very easy steps. Now, the timeline might be different for everyone. It could take someone 3 months, it could take someone 6 months to a year. It's very different from person to person being able to actually put this into practice and recognize what is going on. Now, we can help you break down the timeline, right, required to actually learn these steps in order flow at TRADEPRO Academy. So I want you guys to check out our free futures course on our website, but also check out our live trading room where we do this on a daily basis, and you won't be disappointed from what you see. So very, very important to review, put this into practice, and remember, follow these 5 steps to break down, right, your order flow learning now and forever. So thanks for watching. This is Victor from TRADEPRO Academy, and if you want more trading tips like these and breakdowns like these, drop a comment down below, hit that like button, and subscribe if you're new to the channel and want to see more content like this.